So today we are going to be looking at a very brief question. It's going to be a very brief class. Okay, we've been trying to touch classes or accounting for some tax issues that might come up in the course of reporting a particular business. Okay, so we've done payroll, we've done VAT. So today we're looking at withholding tax briefly. So you just have to follow. So withholding tax. Let's not waste time. So let's call it accounting for withholding tax. So usually it is abbreviated WHT. So that's withholding tax. So in order to waste our time, let's quickly understand what withholding tax means. Okay, now withholding tax, in a very simple term, means tax imposed on certain transactions, okay, such that the person suffering it utilizes it to reduce his income tax. So what I'm saying is there are some transactions, okay, that we apply withholding tax on. And these transactions, when they occur and withholding tax is applied on it, the person suffering that tax, okay, uses that deduction to reduce his own income tax. So usually it can be individuals and it can be companies. Okay, so and usually withholding tax is deducted from source. We have to understand that. So what I'm trying to say in essence here is that, okay, let's pick some item. Let's say interest. How do you earn interest? Say let's even look at a very typical example that is related to everybody. Now you have a savings account, for instance. You can go through your bank statement. If you have a savings account, for instance, your savings account at the end of the month, okay, your bank will usually credit you with an interest. That interest, okay, is what you're earning on your on your savings account. Okay, now that bank, okay, is paying you an interest. Are you there? Now the bank will pay the interest and then deduct withholding tax, okay, from source. When the bank deducts withholding tax from source, okay, the bank will remit to what? To the revenue service. Now, what it means is that in the remittance, the bank usually gives a schedule of the person that has suffered that tax and the amount on which the tax is applied, okay, and then references that is required to back up that deduction, and then the person's name as well will be in that schedule. So now what I'm saying that when the bank is remitting that withholding tax, there will be a schedule that will have your name and information, okay, backing up that deduction. So what we're not saying is that you, from which that withholding tax has been deducted, will use that tax to reduce your your income tax when you're paying it to the to the revenue service. So we can simply say that withholding tax is a form of tax paid in advance by the person that suffered it. So if you're suffering withholding tax, it means that you have paid the government or paid the revenue service your tax liability in what? Advance. So when you are now filing returns for your tax liability, you expect to use that withholding tax to reduce your what? Liability. Now there are various items that suffers withholding tax. All right, so we've taken one, interest, and then you must understand that this withholding tax can be on what? Companies or on what? Individuals. And then you must understand that if you are deducting withholding tax, okay, if you're deducting withholding tax on what? Payments due to what? Companies, you are remitting to what? Federal Inland Revenue Service. But if it is on individuals, you are remitting to what? State Inland Revenue Service. So what I was saying is that, okay, taxes, that withholding tax charged on what? Invoices belonging to what? Individuals. You remit it to the what? State. Okay, that's the that's the state of residence of that what? Of that individual. So if you have someone staying in Lagos, for instance, okay, and then you have an invoice to settle, and then you withhold some tax, okay, that person now, the withholding tax that you're holding on that person's invoice, you remit it to what? To the Lagos Internal Revenue Service, that's State Revenue Service. As a matter of fact, of course, before now, FCT is, handled by the Federal Revenue Service, but now FCT now has its own revenue service called FCT Internal Revenue Service, although they still enjoy some support from the Federal Revenue Service, okay? But truth be told, they now have a revenue service responsible for tax issues for Federal Capital Territory, okay? So that has already been settled now. So now let's proceed. So what I'm not saying is that withholding tax, okay, is charged on various items. I've mentioned interest. You can have dividends. Of course, you know what I mean by dividends. At this level, you should understand these things, okay? And then you can have rents, okay? And then understand that if it is companies, the rate is different. If it is individual, the rate is also different. So you must know the rate applied if the invoice is for company or if it is for an individual. So for interest, if it is for company, it's 10%. Individual is 10%. For dividends, for companies, 10%. Individuals, 10%. For rents, companies 10%, individuals 10%. Okay? And then, of course, this rent also includes, equipment hiring. So when you hire equipment, for instance, okay, withholding tax on it here is 10%. Here is what? 10%. And then we have what we call director's fee. You know who directors are now. Directors are, individuals, okay, appointed to carry out certain services on behalf of a particular company, okay, and then they are paid for that very position, for that very function. So when you pay them, of course, not the company, individuals, okay, you have to charge the necessary withholding tax on the fee, okay. So and then we have what they call let's say consultancy, okay. Consultancy you have for companies it's going to be 10%. For individuals it's what 5%. So you see, let us try not to waste time, okay, because we have contract of supplies as well, okay. So you can just look up the respective rates, okay, for individuals and for what companies. Of course, director fee is 10%, is an individual anyway, so you have to understand that. So you should understand, okay, that the FRS from time to time, we issue circulars, guiding all this, and then you must understand, the rates that is being charged on each of these, payments. Okay. Of course, you should also look at, the issue of double taxation might also come up. Some incomes. Okay. You understand? Of course, if you're paying rent, for instance, is an income to someone. So, if you're dealing with, foreign individual foreign company, possible that what you're taxing here will also be taxed then. That might also result to what they call double tax. So there's what we call double taxation agreement also regarding withholding tax. So you should look up that. We have a couple of countries, China, France, and all that, that have such agreement with Nigeria. So you should look at them, and then especially in the area of dividends, interest, and all that. So you have to get to see those. You can visit FIRS office to demand for this information. They're not really difficult to get. So just get yourself informed, and then also be aware of circulars issued by the FIRS to understand information required from time to time. Okay, and then what I'm saying is that the withholding tax, okay, it's not something you deduct and keep as an accountant. You deduct it and then remit it to the appropriate revenue service. So you must be able to account for it properly. So don't forget, you are deducting. It's also possible that some other people will also deduct from you. So you must be able to know what we mean by withholding tax on payables, okay, and withholding tax on on receivables. Okay, so payables are like your creditors. Okay, you give a job to an individual or a company. After doing, they send an invoice to you. So they are like creditors. You have to pay them. So in paying them, you can withhold an amount of money on that amount to remit to the to the revenue service, the appropriate revenue service. Okay, depending on if it's an individual or a company, and then you give a schedule of explanation. Okay, when you are paying. And then you must understand as well that what we call withholding tax on receivables. Now, receivables are the people, your debtors, for instance. Those are people that are expecting payment from. They can also deduct withholding tax to be remitted to the revenue service on your behalf. So it means that you must follow them to get what we call a credit note. So you too, when you deduct and pay, you must also follow up to get a withholding tax credit on behalf of the people you deducted from. So when you deduct and remit, you follow up to get a credit note for your for those that are suffering the tax, so that they can utilize it to reduce their tax liability, income tax liability. Because most times, if you don't have the credit note, you might not be able to utilize it. Okay, and then your withholding tax on now, that means your people that are owing you, when they pay you and deduct withholding tax, you must also follow up to ensure that they get the credit note from the revenue service and send to you, so you too can use it to reduce your income tax. So you have to understand that credit note is very important. You have to know what withholding tax on payable means, and you have to know what withholding tax on receivable means. So with that little barrier, let's quickly look at how to account for it. Accounting for it, as usual, we will need what do you call it? We need your understanding of double entry principle. You should take your class on double entry principles. If you have issues with it, it's there on Jado's Consulting for free. Okay, so let's be fast. So let's say now? Let's say your debtors, for instance. Okay, so if let's say your debtors, debtors are your receivables there. Okay, so they are expected to pay you for a job done. So let's say there is what do you call it now? An amount of, let's say, 100,000 or let's say 1,000. Okay, now this is what they are supposed to pay you. Okay, just for the sake of explanation, this is what they are supposed to pay you. And now they are actually taking a withholding tax of 10%. So that means they are going to pay you less 1,000. Okay, so when you send them an invoice, what will you do? That's like sales, Abby. Okay, so what are you doing? You're going to credit sales, right? Okay, credit sales, let's say 1,000, and then you're going to debit your clients, okay, with how much? 1,000. So that means that this guy is owing you 1,000. But when this guy pays, It's going to pay you less 10%. So what does that mean? It means that if it pays into your bank account, that means you're going to debit your bank, right? With how much? Now 900 naira. But the 100 naira now, what do we call it? Okay, if you debit your bank with what? 900 naira, you're going to credit this your client to reduce the amount that is owing you with 900, Abi. But now there's another 100 naira that's on it, which is what he's withholding. So you have to what? Credit him again, that's your client, with what? 100 naira, and then debit your what? Withholding tax on receivable with how much? 100 naira. So typically this, we cancel out this, right? Okay, in principle. So now what that means now is that what? You have a withholding tax on receivable of how much? 100 naira. So you have to now follow up with the client to remit this what? 100 naira to who? To the what? Revenue service on your behalf. And then get you what? A credit what? Note. It is this credit note that you will now use to reduce your what? Your income tax what? Liability. So what it means is that you have paid 100 naira in advance out of the tax liability that might come up, your income tax that might come up when you are what? Filing return or being assessed for a particular what? Period. Okay? So this is when your client is deducting. What about when you are deducting? Okay? Now, what about when you are deducting? So let's say, of course, that's like, you purchase something. So let's just say, okay, purchases, all right? So ordinarily, what do you do when you debit purchases? Let's say 500, all right? And now you're going to credit your what? Your vendor, which is the supplier now, or the payable, or call it payable, okay? So with how much? This is debit purchases, okay? 500. So you're going to what? Credit vendor payable with how much? 500, right? Now, when it is time for you to pay, you're going to pay this guy less 10%, right? Assuming you're applying with tax on 10%. So what does that mean? It means that you are what? Debiting this guy. What's 10% of this? 50 naira. That's 450. You're debiting this guy 450. That's your vendor, right? You're debiting your vendor. You're debiting your vendor or what? Payable with how much? 450. And then what? You're crediting your what? Of course, you're paying him through the bank. You're debiting your bank. How much? 450. Now, this guy that can't be paying 50 naira there because you're withholding tax, right? But that is not your own. You're supposed to remit it on his behalf to the Inland Revenue Service. So what do? You're going to debit him again. That's the vendor or payable with how much? 50 naira. And then you now credit what now? Credit what now? Withholding tax on what? On payable. How much? 50 naira. So technically, what? This 2 here, we cancel this 2 here, right? Do you understand? Do you understand what I'm trying to say now? This 450 that you debited the vendor with 450 here, credited what? Your bank 450 here, right? So you also debited your what? Your vendor payable here, okay? Do you understand now? So this 2 now is cancelling out what? The vendor value. And then this your what? 15 naira withholding tax, which you're deducting on the payable, okay? You're going to have to remit it to what? The revenue service on behalf of your vendor. So that means when you are paying, you're going to have to now credit that after paying anyway. You're going to have to now what? Credit your what? Your bank, right? And then debit your what? Your withholding tax on what? Payable. Of course, when you raise your draft or your check, you have to apply a schedule explaining or giving information relating what? Relating to the transaction and the vendor on which you're paying on his behalf. His name has to be there, the invoice number has to be there, the amount has to be there, the tax amount applied as what? Tax has to be there. Okay, his TIN number has to be there. TIN number means tax identification number has to be there. Okay, and then you must make sure you remit this thing to the appropriate what? Tax what? Authority, so that you don't cause confusion. But sometimes, maybe out of ignorance or for some reason, some accountants, they will remit to the wrong revenue service, and then that will be difficult for them to get a credit note for the the vendor, and then the vendor might not be able to utilize it to what, to reduce his liability. So you have to be able to identify the right revenue service to remit to, and then you have to be able to ensure that you get the credit note, okay, and then send it to your vendor. And then for the one that are deducted from you as well, you have to follow up with the accountant over there, okay, to ensure that they also get the credit note, or to ensure that they remit and get the credit note for you, so that you can use it to also reduce your income tax liability. So you have to understand this basic aspect. Of course, in practical terms, sometimes some people will deduct, they will not remit and all that, but it is your duty as an accountant that is suffering that tax to follow up and ensure that you get the credit, because you're going to utilize it to reduce your income tax liability. Of course, because there's also sometimes where people net off withholding tax with VAT and all that. Yes, you can do that to reduce but that does not mean that your VAT is replacing your withholding tax. Withholding tax is replacing your VAT. Okay, you have to understand that VAT. That VAT is different from withholding tax. Okay, so you have to treat them accordingly. If you're deducting VAT, raise a check, remit your VAT appropriately. If you're deducting withholding tax, raise a check, remit them appropriately with the schedules. Don't mix them up, because you might cause confusion, or might make it difficult for reconciliation. Okay, so that is a brief background on accounting for withholding tax. So the idea is that you must know, or you want to know, your withholding tax on receivables, which you're going to use to reduce your income tax liability, or your withholding tax on payable, which you're going to have to help your vendors utilize to reduce their own income tax or liability. So in that case, when you deduct, you remit, get credit note sent to them. When they deduct from you, chase them and ensure that you get your credit note, so that you can use it to reduce your income tax liability. So quickly, let's take this quick question and then call it a day. So we have the following trial balance relates to that of Fertile Limited for the month of March 2020. So we have administrative expenses, professional fees, sales, purchases, share capital, loan, VAT payable. Okay, I think they've taken care of VAT output and input here. So we have bank account, bank current account. We have bank one-up account. Okay. So what else do we have there? We have accounted depreciation, we have non-current assets and all that. Then we have additional information. The one-up account is an interest-bearing account with AGT Bank. It yielded 5% interest for the month. The bank also deducted the appropriate withholding tax. This transaction has not been adjusted for. Okay. Then two, the professional fee is for consultation paid to Mr. YB for a job done during the month. The appropriate withholding tax has not been accounted for. Then we have depreciation for the month amounted to 250,000 naira. So you're required to prepare the revised trial balance, prepare the income statement for the month. Okay, so this is not something that will take us much time. So let's just quickly do what we have to do. Okay, so we have let's do it this way. So we're taking this out. Okay, all right. Quickly understand that this 500 here is canceling this 500, this 450 here, and this 50 here. Okay, normally we debit vendor payable, then with 450, and debit them again with 50 naira. Okay, so that we can nil it off and credit your withholding tax payable 50 naira. So this came after this. So you should understand what I meant. Okay, it should be this vendor payable 450, and then this vendor payable again 50 to cancel out this credit of 500 here. Okay, so that's just quick chorus. So you understand what I'm trying to say, so you don't think so let's quickly take this out. So let's go. Fertile Limited. Let's go. Okay. So what do we do here? I can see that the adjustment here has to do with what now? Withholding tax receivable and withholding tax payable. So what's the withholding tax receivable there? And withholding tax payable. So let's go. The one-up account is an interest-bearing account. Okay. So what's the one-up account balance now? One-up account. So what's the balance there? Go to the trial balance there. What do you have? One-up account there, 10,500,000. So that's okay. 10,500,000, right? Now they said what? There's an interest on that account, right? It did 5% interest. So what do we have? So interest, that would be 5/100, right? Times 10, 5. So what do we have there? 0.05 times 10, 500. So this is 525. Okay? That's 525,000 naira. Okay? Now this is your interest income, right? But now they said the bank also deducted what? Appropriate withholding tax. So what's the withholding tax on interest? Withholding tax on interest, if you recall, is what? 10%, both on company and on individual. And this is a company, so it's 10%. So I'm going to say withholding what? Tax, right? That will be what? 10/100 times 525. So what do we have there? So this is 52.5, right? This is 52.5 there. So basically, the interest that you have earned is this. So what will be the journal entry for this? So you're going to say the bank is paying you this. That means what you have here will increase by this, right? So that means you're going to debit what now? 1-up, right? With how much? 525, and then credit your what? Interest income with 525, right? And then the bank will also what? Is taking this out from your what? From your bank account, which is more like what? An outflow from your what? Bank account. Remember your bank reconciliation statement now. You're needing that knowledge here now. So if you don't know how to do bank reconciliation statement, go back to bank reconciliation statement and take that class. So now debit 1-up 525, credit your what? Interest income 525, right? And now you're going to what? Debit what now? Withholding tax what? Receivable 52.5, credit your what? Your 1-up, right? With what? 52.5. So what am I trying to say here? What I'm saying here is that the bank gave you an interest of 525, but the bank now deducted withholding tax. Okay? Withholding tax of what? Of 52.5. So the bank will have to go and remit this to who now? To the what? Revenue service. So the bank is going to what? Credit you with this. Remember, when the bank is crediting you, you're debiting your bank. When the bank is debiting you, you're crediting your bank. So don't forget your bank reconciliation. So you need that knowledge here now. So go and take that class. So the bank is going to credit you with 525, which is your interest that you have earned. And the bank will debit you with 52.5, which is the withholding tax. So what does that mean? It simply means that what? Debit 1-up, which is the bank account 525, credit your interest income 525. Okay, debit withholding tax receivable 525, credit your 1-up account 525. So when the bank remits to the revenue service, okay, the bank expects to send you what? A credit note. All right, that credit note, you're going to use it when what? Filing return, or when settling your what? Tax liability. So that means your tax liability will have to reduce by 52.5. All right, so this is for the withholding tax on receivables. Now the next one there, they said what? The professional fee is for a consultation paid to Mr. YB for job done during the month. The appropriate withholding tax has not been accounted for. Now, you see, if you look at that was Mr. YB is an individual. Okay, and we have what we call consultancy and professional fees. So if it is for a company, it's supposed to be 10%, but if it's for individuals, then that's supposed to be what? 5%. So this guy here rendered a service, more like a consultation service during the month. And then I can see 4,500,000 there. If you look at trial balance now, they've already debited professional fees. So there are two things. It's either they are accrued for it or they have already paid him. Okay? So if you look at it now, there's no payables here. So we cannot assume or conclude that they are accrued for it. So if you assume that they are accrued for it, then you have to do the journals in line with accruals. But if you assume that they've already paid, you also have to do the journals in line with what? With cash payment. But here, we can assume that they've already paid this guy. But they paid him without deducting withholding tax. So what happened there? Consultation. How much is that? 4,500. All right. So we're going to say what now? Withholding tax there will be 5/100 times 4,500. But he is an individual. It will be a company now. Okay. Now, but now an individual consultation for individuals. Okay. Is 5% for individuals. So let's do that quickly. So 5% of this 0.05, okay, times 4,500. So this is 225, right? So what does that mean here? So now this guy has been paid. So, but we did not, we didn't deduct 225 from him. Okay, so it means that he has to now be owing us. Ordinarily, if we accrue for it, we would have debited him. That's debited accruals, and then what? Credit withholding tax on payables, and then we're not paying his balance. But now we're already paying him the whole 4,500. So that means we're going to debit him and then make it hold against as though he's owing us. So when next he does another job, we'll take that off his invoice, or we even follow him to return that money, depending on the relationship that you have with him. So let's just do it based on the question now. So we say what? Debit what? YB. YB is his name, right? YB is his name. So let's debit YB there. YB, I can see YB. So YB will debit him with what? 225, and then credit what? Withholding tax payable. Okay? With what? 225. So when we now remit, if we remit, now we remit to the what? State Revenue Service. What do? We debit withholding tax payable with 225 and credit what? Bank with 225. Okay? So what this simply means is that we have to get a credit note for YB so he can utilize it when settling his what? Income tax liability. So these are the journal entries. So let's do the revised trial balance. So let's go now. Revise the trial balance. This is our marker. So we have debits, we have credits, right? So what are the items there? I can see administrative expenses, 13,000. Professional fee, how much that? 4,500. Sales, I see sales to be 52,600. Okay, purchases, I can see it to be 25,600. What else? Share capital. Share capital, I can see it to be 20. What else? Loan. I can see it to be what? 18,475. What else? VAT payable. I can see it to be 1687. What's the next one there? Bank current account. So bank current account there, 14,162. 14,162. What's the next one there? One up will change. So like I said, one up changed, and then of course these journals here will have, we had what do you call it, interest came into the account, and then withholding tax went out, so we have to make it reflect in the what balance. So here I think the markers are not giving us. Okay, let's change the marker. Okay, so we have one up, yeah. So we have debit, credit. So what's the opening balance for one up here? 10,500. So we'll say balance brought for 10,500. Okay, so debit one up here, right? So we'll say interest. Interest is what? 525, right? Debit, credit one up here for withholding tax, right? So we'll say withholding tax payable. How much? 52.5. So we have debit and credit one. So what's the difference there? The difference there, what do we have there? 10,500 minus 525. Oh, sorry, plus 525. Okay, so we have 11,025. So minus 52.5. So we have balance credit of what? 10,972.5. 11025. So balance brought down here will be 10,972.5. Okay, times our new one-up balance is what? 10,972.5. Okay, so here is 14,162. Okay, this is 2,5,600 times 20,000. 8475 1687 22,600 4,500. Okay, so what's the next item there after one up? Accumulated depreciation. So let's call that accumulated depreciation. What do you have? 5,000. The next one there we have non-current assets. Non-current asset there. What do we have there? 30,000. So what's the next thing here? Interest income. Interest income here. Credit 525. What else do we have here? Withholding tax receivable. Okay, so withholding tax receivable here is what? 52.5. So we've done that here. So here we have YB, debit YB. YB is a debtor now. What do we have? 225. Okay, and then we now have what there? Withholding tax payable. Withholding tax payable. How much is that? 225. Now remember, this one here shows that what? The withholding tax payable has been what? Remitted. But you're not remitting in this period that we are in, this month that we are reporting, you're going to remit in the following month. So this one here shows that when we're remitting, but this remittance will happen the following month. Okay, so of course, if you want to adjust for it as though you remitted in the same month, then that means that you're debiting withholding tax payable with 225, which will nil off this, and then you're going to credit your bank with 225, which will reduce your bank account here. So you have to draw another ledger if you want to put this in what? Extended trial balance. But because of the fact that practically you're going to be remitting the following month, so it means that in this month that we're reporting, this cannot be part of the what? The trial balance. Okay, but it's a journal that you have raised, but you're going to effect it when you make payment, which will be the following what? Month. Okay, but you have to understand it. But if you want to make it, part of, look like you remitted it in the month of report, then you can, of course, adjust for, your bank, Abby, and then, you're going to have to credit your bank here. That would reduce it by 225, and then, you're debiting withholding tax payable, which will nil off this withholding tax. That means your bank will reduce. Okay, so let's just do it that way. Okay, let's say we're remitting it in the following month. So let's leave it in the account for the month of reporting. Okay, so the next item there, we have then we have depreciation there. I can see the bill for the month amounted to 250,000. So of course you're going to have depreciation there, which is 250. Then accumulated depreciation do what? 250. Can even adjust for it with this one here. But let's just, let us see what we have there. Okay, so we are adding up there. Okay, we're adding up all this 13,045, all that 25,600. Okay. What's this? Okay. So this is we have 9876 here. 98762. So if you add up everything here in the credit side, we have 56,200, 20,000. Okay. 18475, 1687, 5,000, 525, 225. So it's at 98,762. So you can see that the debit side, okay, in the trial balance there is agreeing with the credit side. So that's the thing. Then I said prepare the income statement for the month. So let's quickly prepare the income statement. So we have Fetule Limited. Okay, so let's say income statement, okay, for the month of what? March 2020, right? So what do we have there? Turnover here is what? 52,600, right? So what's the purchases here? Of course, this is your cost of sales, so let's use the right one. Okay. Cost of sales here is 25,600. Okay, so let's take that out. What do you have? 52,600 minus 25,600. I have 27,000 here. So, of course, this is your what? Your gross. Then we have other income. What's your other income here? There's an interest income here, which is 525. So we have 52572. You can call this your gross income. Okay. So what else? So what else we have then? We have our what? Expenses, total expense. We have admin and what? Running expense, right? So what do we have? Admin will be what? 13. Okay. That'll be 13 here, 13,000 plus promotional fee here, 4,500 plus what else? We have depreciation here, 250, 17,750, 17,750. Okay, so we take that out. We have 9,775. So this is your what? Your profit for the year. Your profit or loss for the year. Now, this is the income, okay, on which we're going to have to what? Do our assessment for the tax that you should pay. Of course, this is for the month anyway. Income tax, okay, is usually, paid on preceding year basis. So at the end of the year, of course, the following year you will now be what? Assessed based on the profit you made in the previous year. So this is March 2020. We're still going to report up to December 2020, right? And then we're going to be assessed for 2020 in 2021 to know the income tax, okay? What they call company income tax are going to pay for 2020 year of assessment, right? Okay, so now the idea now is that you're still going to have to what? Account for all your withholding tax receivable during the period, just like we've done in this month here. And then when we are trying to, settle our tax liability, we use the withholding tax receivable to reduce the tax liability with what? Revenue service. And don't forget, like I said, you must follow up with what? With whoever has deducted withholding tax from you to get a credit what? Note. And then anyone that you have deducted, you must get a credit note for those that that suffered the tax that you deducted. So this is a simple illustration helping us understand how to account for withholding tax payable and withholding tax receivable. Generally, we're able to look at how to account for withholding tax from the accountant perspective. So if you have questions, you can reach me on the numbers displayed. And don't forget that you can support us by paying to the account displayed, okay, in form of what? Benevolent funds or in form of donations, okay. And then you can as well pay for copies of my textbook that we distribute to students for free. Like I said, if you pay for copies, you have the right to determine where the copies go to, depending on the state that we are distributing at that point in time. Thank you.